Ford's third quarter earnings have unveiled a paradoxical situation. While the auto giant managed to edge out its rival General Motors in terms of electric vehicle sales, it found itself grappling with an escalating financial loss in its EV division. The primary culprits? A sluggish demand for EVs and a fierce price war, courtesy of Tesla. In the third quarter, Ford reported sales of 20,962 electric vehicles, a figure that marginally surpassed General Motors. This uptick was largely due to the robust production and sales in the Mustang Mach-E. Specifically, the Mach-E witnessed a significant sales increase of 42.5%, translating to 14,824 units sold in Q3. Out of these, 5,872 units were September alone. From an outsider's perspective, things might seem peachy for Ford. After all, the company's EV deliveries soared by 44%, bringing in a 26% year-over-year revenue growth for Ford's EV unit, amounting to $1.8 billion. But as is often the case with business, the devil lies in the details. The heightened sales volume didn't translate into profitability. Instead, Ford's EV segment registered an operating loss of 1.21 billion euros in the third quarter. This is a substantial increase from roughly 3 billion losses in the preceding quarter, more than twice the loss reported in Q3 of 2022. Breaking it down, Ford lost an eye-watering 33,500 on every series and its EVs sold during this quarter. This figure overshadows the estimated loss of €30, 150 per EV in the second quarter. Sliding, Ford anticipated a cumulative loss of 4.1 in its EV division for the year. So, why this financial downturn despite increased sales? Ford attributes the Q3 losses to its consistent investments in next-gen EVs and, more importantly, the intricate market dynamics. The automaker then pointed out a noteworthy trend. A significant number of potential EV buyers in North America are reluctant to pay a premium for EVs compared to their gasoline or hybrid counterparts. This reluctance, in turn, exerts downward pressure on EV prices, squeezing profitability margins. Responding to these challenges, Ford announced a rollback of approximately 11 billion euros in its planned EV investments. This will see a reduction in Mustang Mach-E production and a delay in the opening of one of its two proposed battery plants in Kentucky in collaboration with SK On. While the exact duration of this delay remains undisclosed, Ford confirmed that its other battery plant in Kentucky and the Louisville City complex in Tennessee are progressing as planned. As Ford's chief financial officer, John Lawler, while addressing the situation during an earnings call, remarked that the growth in the EV segment isn't stagnating. Instead, it's evolving and paced slower than anticipated by the industry and Ford itself. Lawler highlighted that with the current softened demand, Ford's immediate EV capacity requirements have dwindled. However, he assured that Ford remains committed to its future lineup of EVs, which includes a 3-row SUV and a full-size pickup. To add to the complexities, Ford's finances are expected to be further strained due to a tentative agreement with the United Auto Workers Union. This agreement proposes a 25% wage hike for 57,000 workers over 5 years. According to Lawler, this could add an estimated 792 to 839 euros in labor costs per vehicle. Furthermore, the recent 41-day strike by UAW led to a production loss of 80,000 vehicles for Ford, incurring a cost of 1.21 billion euros, and effectively negating 1.12 billion euros in Q3 income.